Hi, Ron here. This video is about the Andrews Professional Level course. A couple things you need to know right away. In order to take this course, you need to first register, or at least have signed up, for the Andrews Advanced course and then the expanded course. Reason being that we take concepts from both of those courses and utilize them in this particular course. And we also add other things, and it's a matter of uh, adding on. Okay, so let's get, without any further ado, let's take a look at some of the things we cover. Okay, let's see. Okay, so one of the things we cover is what I call A1, A2, and A3 patterns. A patterns, this is an example of an A pattern right here that uh, when I see this kind of a signal, what I do is I just go in there and buy a bunch, and that's really it. Nothing fancy. Let's see if I can. Oops, 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 oops. That's not what you want to see. Let's go to Snagit Editor. Let's see what we've got. Here we go. Okay, here's, we just showed you a chart in hogs, okay, and this is a few days after that was posted, and this is the position in hogs. Just have 4 contracts on, up a little bit, as you can see here, and if all works out, this will wind up being up quite a bit by the time we're all done. Okay, let's see. Okay. Okay, here's another one. Now this will say corn futures, da 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 da. And here, what we did here was we took profit in the corn futures. My mistake, got out too early, and you can see the corn futures chart. I'll show you in a moment. That was what we did last week. We got out of the corn futures, and I'll show you a chart in a moment. This isn't having one contract on. This took a good week and a half or two, and it was a result of 6 contracts, and I think the margin was a total of $6,600. So you know, and as I mentioned when we first put on this position, there is considerable risk here, as there is in all trading. Okay, so let's take a look at the corn. What did we actually start out with? Well, here's the cattle. Okay, and it's over here right now, and that's because it's kind of hanging in there because it's limit up. So there's, you know, what do you do when prices are limit up? Well, if you're long, you go hallelujah. If you're not, and if you're short, maybe you can get out the next day. Actually, you call your broker. Sometimes there's things they can do to help you get out by doing things with position things that are out there. Yeah, here's the corn. Here's where we first posted it and reminded everybody that this is risky stuff. Okay, and this is what happened afterwards. The fact of the matter is it went way above this area here. My mistake on getting out when it was up here. Or was it here? Anyway, my mistake on getting out early, and it's done rather nicely, and from my point of view, it may even do even more. So what do we cover in the pro course? One of the things that we do is we do what I call a day-by-day analysis, and you get to see a video on that. So you get to see exactly what I look at and my explanation of whatever is going on in the market right there at that time in the morning, and boom. And that's the way it is. So, for example, this morning or yesterday morning, you would have seen that I was talking about the hogs and sorry, not the hogs, the cattle, and this being in this situation here, and that when it came to the Dow, I know this morning I was mentioning why I really like this situation here. Okay, so we cover these kind of things that people really want to know about. And let's see some other examples of some situations. Now here's a situation where in the Forex we were simply looking for a quick power move. So by the time they came down here, we were out, and we actually have software that tells us when to get in and when to get out. So let's move up another one here. Here's a nice example. This was in the British pound over the euro. Once again in the Forex. Here's when we published it, and you can see here, and prices even went a tad lower. And surprise, and then boom. Okay. See, we have another example. Yeah, we started over here, and we were looking for prices to go down nicely, which they did in the cotton. And what we're going to do is we're going to explain these kind of things. What's the logic behind this? And you're going to see that it's what I teach in the course. Here's a nice example. This is gold comics, real easy. So here we were. Here's where we made a little move. We were sitting right over here. I remember sending out an email right over here, and this was the result. And this is about when I got out. Probably should have waited a little longer, because eventually it went over here before it started going down, but that's the way it goes. And another one here, power move in progress, and the soybeans. This one was not difficult. At this point here, I was in here selling right along in here, and then down she went rather nicely. But this, once they came down here, we got the heck out, because it just looked to me like it was going to take off in smoke, which it did. But I didn't post that one. Okay, so this is some of the stuff we go over, and what we like to do is on a daily basis have a video, and you can see these over a period of time, because we have a nice library of them, and you can see what the analysis is on a day-by-day basis, and what course methods we're using and why. You see the logic of it. And it's really kind of neat. So we go over that. What else do we do? Well, one of the things that we go over is is how we build a system. For example, here's a nice one. What we'll do is we'll go over what the particulars are of this particular system for the S&P. This is a lovely little hedging system, and this is these numbers here that you see are no leverage. And so, this one here, for example, historical study over a couple of years is up over, I think it's up over 30%. Now, you always want to ask, what's the down draw? Yeah, 33 is the calculated annual return. And Sharpe ratio is 4.91. That's important in some cases. And down draw, which you need to know, max system down draw 4.62%. So that's important. Once again, the payoff ratio is red, and the reason is because of the way we trade. What we look for are what Andrews and I both call high probability trades. And so when we get in a trade, we'll have what I call a fire exit. And I like to use that term more so than the term stop or a stop loss. I think you get the general idea of what I mean by a fire exit, pretty much same as stop loss, but the mental thing around it is a little different. And so the problem that we have, according to the computer, is that, hey, when we get a trade, the fire exit's kind of far away, and so it gives us a red payoff ratio in some cases, and that's just the way it is. But, as long as we're getting the results, who gives a hoot? Okay. So if you're interested in it, please first get the advanced course and get the expanded course material, and then we can jump right into the next level. Okay. Thank you for your time. See you next time.